Huge inventory withdrawal, continued pledges by Saudi Arabia and OPEC to cut production, and some confusion regarding the global economy and the expectation that we might not head towards a recession. These are the reasons, I think, that have recently contributed to the rally in oil prices. However, in today's Monday Macro View, I would try to explore the question, will oil prices touch $100 mark? Let's dive in. Just before we start the show, for context, I believe it's very important to know the reason behind the rally. Why are oil prices rising? So if the oil prices are rising due to an increase in demand, then of course the sustainability of the rally becomes more prolonged. However, if it is not because of that, as is the case apparently, then I think, and as I will try to prove, as I would try to claim, I think the rally will fizzle out soon. The first slide shows Saudi Arabia, the kingdom's budget deficits, and it has been running a budget deficit for the past 3 quarters. Why am I focusing on Saudi Arabia? Because we need to understand that the de facto leader of the OPEC Plus alliance is Saudi Arabia. Saudi Arabia is undergoing, from a bigger picture point of view, it is important to understand it's undergoing an economic shift in terms of its composition. Say they're trying to move away from oil and gas, not now, but of course in the future. And they are also focusing on lots of bigger picture projects, mega factories, and it involves a lot of spending. So despite a 12% increase in revenues, it was outpaced by a 13% rise in expenditure, more social spending, more social benefits, and a jump in capital expenditure. All of this means that Saudi Arabia, the de facto leader of OPEC Plus alliance, needs higher oil prices. According to IMF, $90 per barrel is the price mark. According to them, it sorts of balances the budget, and also important to fund the Saudi Vision 2030 diversification program. So that's the incentive there. Of course, for Russia, so there's a whole intricate geopolitical dimension to this as well. Russia, of course, they have been suffering in terms of falling revenues from the oil and gas sector. However, these production cuts can increase the price. So volume versus the price, that can have a net effect on the recent fall in volumes and keep the revenues afloat. In the next slide, you see that Saudi economic growth have also been reduced down according to the recent update by IMF in their World Economic Outlook. So the kingdom's economy will grow only 2.8% in 2024, which is a minus 0.3 adjustment as compared to its April's forecast. In fact, Middle East and Central Asian regions' growth is expected to decline from 5.4% in 2022 to 2.5% in 2023. A downward revision of 0.4%, and the main development to which this reduction can be attributed to is the fall, or steeper than expected, to quote the report, growth in Saudi Arabia from 8.7% in 2022 to 1.9% in 2023, which is a negative revision of 1.2 percentage points, which is huge. So when you understand this, you realize, okay, that is why Saudi Arabia needs higher oil prices. That is why there is a support of continued pledges for production cuts. And that is why the oil prices have been misinterpreting the signals. We look at the next slide. It's about Russia, and I'm mentioning this in the context of the supply. So there is a narrative out there as well that, okay, there might be a supply crunch in the offing. That would only happen if there is an increase in demand, which, as we will see, might not be the case even in the short run, at least in the shorter run. So Russia, despite the sanctions, despite the production cuts, they have set a record high for drilling pace. And this is very interesting. And Matt and I have always talked about this, and we need to do a show on this separately. Russia, despite all the sanctions, despite the oil field services companies leaving the country, they've still managed to maintain their oil supply, which is interesting. But Russia drilled, the rigs drilled were 14.7 thousand kilometers of production in Russia from January to June, a 6.6% increase, more than the planned, more than 6.6% more than the planned, and 8.8% more than the same period in 2022. Interesting, right? So this was just there to highlight the supply side of the things. Now, whether or not oil prices will hit $100 for me is an extended question, is a sub-question of whether or not major global economies around the world would enter a recession. Here is where this chart comes handy. ISM US non-manufacturing index. You can see it's heading downwards. The purchasing manager index for service sector has also slipped to 52.7 and from 53.9. If you look at the next slide, this is China's the second largest economy in the world, and the manufacturers reported another widespread decline in business activity. The purchasing managers index was just 49.3 in July, up from 49% in June. That's a 0.3% improvement. I wouldn't call it improvement, but it doesn't show growth, right? So if you look at Eurozone, about which we covered a lot in the last show, actually the whole show was about it, the manufacturers reported the most widespread decline in business activity since the first wave of coronavirus pandemic in 2020. That is a huge thing. So Eurozone's purchasing manager index fell to 42.7 in July from 43.6 in June, and 49.8, almost 50 from a year ago. So this is the 38-month lowest point in their purchasing managers index. So moving on to the next slide, this might be the outlier in this narrative, in that it might outturn the whole analysis. If the hurricane season is stronger than expected, then I see, or we can expect oil prices edging towards 100. But that would, of course, be an extreme case. It will depend if and when it happens. Most of the times it happens between mid of September to mid of October, as you can see from the slide here, from the chart. But if and when it happens, how are the other things, oriented? What about where does Fed stands? Where is the purchasing manager indices of different economies? What is the narrative, or what is the idea? What are the expectations of the traders as well? Because recently a lot of hedge funds covered their positions, covered their shorts. That is why there was an increase in oil prices. The CSU meteorologist predicts that there would be 18 named tropical storms and hurricanes this season, which is above the average of 14.4 observed between 1991 and 2020. But we will see time will tell about the intensity of these storms. Finally, the market sentiment tracker, you can see there were lots of positive developments. So the bullish side is also getting heavier in terms of news, at least, but there remains a lot of bearish elements as well. I still think the market outlook is confusion. Thank you so much for watching. I'll see you all next week.